Hi to everyone. Today we'll move on to the most important topic, that is preparation of trading account, P&L account and balance sheet. Okay, so as per our accounting cycle, we would have completed in the last few classes how to pass the journal entry, from there the ledger posting and the trial balance. Till that point we have completed. Now in this class we will not be able to complete everything together, so I thought we will do it in two classes. Okay, so from trial balance, how we are going to prepare the trading P&L account. That is, the trading P&L account is a statement which shows you what is the gross profit earned and what is the net profit earned by the firm, and the balance sheet is a statement which shows the position of the company. So this is what we are going to concentrate. So the format of the trading account and P&L account and balance sheet has to be prepared simultaneously only. So I'll try to explain this simultaneously. There are 14 other two main points before going into the format of our trading account and P&L account. So that basic points alone I'll just finish it off. That is, first point we should remember when we are starting this final accounts. It is preparing the trading account and balance sheet. First point is, from trial balance only you are going to post in trading account and balance sheet. So trial balance items will be posted only once. Okay, and there are certain items called adjustment will be given below the trial balance, which we have to make the adjustment. Those adjustment we have to do 2 times posting. Okay, for example, closing stock, now one you have to post it in the credit side of the trading account, and one we have to post it in the asset side. We should know it. So adjustment has twofold effect, and item in the trial balance will have one-fold effect. That has to be kept in mind. Then the next logic is, from the trial balance only we are going to prepare, right? So trial balance debit side items will go only to either trading P&L account debit side, or it will go to the asset side of the balance sheet. Okay, then trial balance credit side item will go to trading account or P&L account credit side, or it will go to the liability side of the balance sheet. Any one is possible, okay, out of all these things. So these are the golden rules, like we can say, that we should remember before going and posting. Okay, then one more easy step which I want to tell you is, there are 14 adjustments which are there in the final accounts. Okay, so today's class we are not going to see all the 14 adjustment. We are going to see just 7 adjustment, and in next video I'll post the next 7 adjustment. Okay, out of the 14 adjustment, definitely any 2 of the first 4 things will come into place. For all the 4 things I have a shortcut, I have written it. Okay, so you might know, when it is an expenditure you have 2 angles, either it can be outstanding or prepaid. In income you will have 2 angles, accrued income and income received in advance, given in the adjustment. Outstanding expense, now simply to say the expense which have already been incurred. Okay, so but the payment has not been made, that is the meaning to it. Prepaid expense, now the expense has been made but the service of it would have not received. For example, best example, insurance premium you would have paid till the month of June, but actually the accounting year closed on 31st March. So we call that for the 3 months period. So April, May, June we call prepaid insurance. That is the meaning to it. Okay, so we would have paid in advance but the services would have not received. Outstanding salary usually we will pay at the first week of the month, next month, but the service has been already received, so the payment is pending. That is the meaning to it. Income we have again 2 things: accrued income, income received in advance. Accrued income income which we have already it has been due, but the payment is not been received. Okay, for example, from we would have done all the work, and in our company they would have informed us to pay 2% commission, but the payment is not been yet received within 31st March, but they will give us within a period of weeks time or months time. It is called accrued income received in advance. Best example, rent. We might have a property where that tenant might going out of station, so he might pay the rent of the next 2 months in advance to us and might go. Okay, for example, in March itself he is paying for April, May. Now 2 months rent we have received in advance, so it is called income received in advance or received in advance income. So there is some meaning to it. Definitely any two items will be there in each and every problem. So the shortcut is outstanding expense add and take it to the balance sheet. Prepaid subtract and take it to the asset side. Okay. Accrued income add and take it to the asset side. A will be the int. Then received in advance, income received in advance, subtract and take it to the liability side. So these are the int box which usually I used to say. So these are the small tips before going on to the sum in detail. Now we'll move on to the sums. Okay, so we'll first move on to the format of financial accounting. So moving on to the format of financial accounting. So we'll move on to the format of financial accounting. So financial accounting simultaneously, it's always better to open all the three accounts simultaneously. Okay, so simultaneously you will open the trading account, P&L account and balance sheet with some spacing effect. Trading account just leave 4 to 5 lines or maximum 6 lines, then leave that page fully for P&L account, and in next page always open the balance sheet. So if you open simultaneously, it will be easy and comfortable for posting it. Okay, so that is the best way of doing the sum every time. Okay, then moving on to the trading account. What is trading account? So in the manufacturing company or trading account plays a very important role. Okay, so in that case we call manufacturing and trading account, and it's a lengthy thing, but now we are seeing a simple sort of sum where the trading account is it's very simple, where they get the goods and sell it. That is a simple kind of version we are doing. So in simple trading account will be, you will have opening stock, then you have purchase less purchase return, then you have all the direct expenses involved in manufacturing like carriage and freight inward, wages and factory rent, dock charges, all those things which is directly involved in converting the raw material will come in the trading account. Okay, so only wages, factory rent, all these stuff are coming in the trading account. Then credit side you have buy sales less sales return. Okay, adjust in the inner column and take it to the outer column. Then buy closing stock. This is the first adjustment which we are going to see. Okay, so the first adjustment which would have been given as closing stock. Every sum will have this. Even though in 11th standard, if the lesson is without adjustment, without closing stock, we can't do this trading P&L. So every sum will have this closing stock. So closing stock, first thing, so it will have a twofold effect. See, one is in trading account, credit side we will post it. Simultaneously, immediately what you will do, you will go to the balance sheet and post it. Closing stock. You can't write the word closing stock, so to stock into you will write it. Okay, it means stock at the end of the time. So you will post it immediately over here. So this is the twofold effect, and the adjusting entry also is there. So adjusting entries for all these 14 items we will see separately in another video. Okay, so this is the first adjustment. So after posting all these stuff, you will balance the ledger account, and you will get 99% gross profit. Means that is that when you do a trading account, when you do a business, you will have the gross profit. Okay, if you get a gross loss, the purpose of doing the business is you're getting a loss at the time of purchasing and selling itself. Okay, so that is the meaning to it. So that what the trading account relieves. So you'll have a gross profit. That gross profit you will transfer to P&L account credit side immediately. So once you find out this, immediately you will transfer. So the first point is you'll write by gross profit and you will get that amount. Then if suppose there is any loss sometimes, then you will get it over here. Then the next item is outstanding expenses. So for example, I have taken a salary is there. Second adjustment would have been 14 adjustment we are going to see, right? For second is outstanding, I'm going to tell you. So there might be some related expense. So here I have taken salaries. Two salaries you will write the amount which is given in the trial balance plus outstanding salary which is given in the adjustment, add it and put it in the outer column. And immediately this outstanding amount, twofold effect illa, unnor effect, you will go and give it in the balance sheet liability side la. Okay, then next as adjustment is prepaid expense. So some example, for example, I have taken insurance premium. So insurance premium mode trial balance amount will be there. Write down, subtract the amount which is given in the adjustment, adjust in the inner column and take it to the outer column. This prepaid insurance amount which is given in the adjustment will have a twofold effect. Immediately go and post it in the asset side of the balance sheet. See, asset side of the balance sheet, prepaid expenditure I have written. Okay, so this is how you will do it. Next thing, you will have the accrued income. Okay, so for example, I have taken commission received. Commission received which is given in the credit side of the trial balance, take it, add the accrued income and put it in the outer column. Accrued income will go to the asset side. So balance sheet leave some space and put it simultaneously. When you do one or two sums, you will get that spacing effect also. So leave some space and 5 to 6 lines. Then you write in the last accrued income, then which is given in the adjustment. Okay, then rent received in advance. Okay, so rent received would have been given. So from that subtract it and take it to the outer column, and rent received in advance will go to the liability side of the balance sheet. Okay, so these are the first 4 important things, 5 important things including the closing stock. Definitely 3 items will be coming in to you. Then next set of 2 things which I will do it for the time being is interest on capital and interest on loan. Okay, I'll tell you what is this interest on capital and interest on loan. See, the owner have contributed a small amount in doing the business. Example, or 1 lakh which he has started the business. If he has deposited this 1 lakh in our bank, you would have got one minimum in interest. Instead of that, he has invested in the business. So he expects that interest from the company. So for the company, it will be an expenditure. Okay, but for the person who's doing the business, that is the owner, income. That's the angle. Okay, so interest on capital is an expenditure to the firm, income to the owner. The reverse logic. Interest on drawing is what? Some amount you will withdraw every month, every 3 months once on the madri, because he is doing the business, he wants some money. So that part he has to withdraw from the business. So what he does, every month he withdraws. On that he pays some interest to it, to the company. So for the company it's an income, whereas for the owner it's an expenditure. Okay, so he has to pay it to the company. So on this logic we are going to see. First what you will do, go to the balance sheet. First find out what is the capital amount. On the capital amount would have been given in the trial balance credit side. Calculate what is interest on capital, or 8% or 6% would have been given. Just multiply the amount into 1 lakh 1 lakh into 8 by 100 you do, will get 8,000 and the madri the amount would have been given. That is what is interest on capital, that you will add it over here. in the same format only you have to write it, okay, here, and take it to the, it's an expenditure to the firm, so you'll write it debit side of P&L to interest on capital. Same way, find out what is the drawing amount. Drawing amount would have been given in the trial balance, okay. From the drawing amount, calculate the interest on drawing. Same way, some percentage, 2%, 3% might be there. Calculate, you will get an amount. Here, from the capital, you will subtract. For take it to the P&L account, credit side la, you will post it by interest on drawing. By interest on drawing, you will post it, okay. Then I'll stop with this big format for the time being. 7 adjustment we were complete, okay. So capital and when you do the full-fledged sum, net profit or net loss, you will get it. So net profit now you will add it, net loss now you will subtract. Then drawing might have been given, that if it is there, subtract. Income tax is also should be considered as a drawing, okay. It's a personal expenditure, it's not an expenditure of the firm, it's a personal expenditure of the owner, so you will take it as drawings only. So that point alone remember here, that also you will subtract. Add your interest on capital, subtract your interest on drawing, adjust it, you will get an amount, take it to the outer column. So with this I will stop for the time being. 7 adjustment has been completed with this. The next set of 7 adjustment we will see in the next video. Thank you.